Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 13th. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman from mainstream media, but what I'm here to do is to teach you some different option strategies that you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not a whole lot to see there. We did get Great Britain's average hourly earnings came in line with expectations at 3.7%. Last month's number was revised up slightly from 3.4 to 3.5. Then we move back over here to the United States because there's not a whole lot going on across the pond. And we get the NFIB, which is National Federation of Independent Independent Businesses. It's a small business index. This is a real key one because remember, I talk about velocity of money and all of these things. This is a gauge of how that small businessman feels about what's going on in the economies around him. So this is a great judge. You're picking all these little guys to ask them how they feel about the economy, okay? And that number came in at 104.7, which was in line with expectations. A pretty darn good reading, to be quite honest. I mean, actually, ever since Trump got into office, that reading has jumped from being in the 90s to consistently being in the hundreds. That's because the economy has started really picking up since Trump was in office. He created that velocity of money, giving us tax breaks. We all spent that money different at these small businesses. That's what's driving velocity of money, okay? So that is actually a really good sign. And the reason why I'm getting a little bit worked up about all this is because of all this stuff about the Fed, and I'll get into that once I get through all these numbers. We got the CPI coming in line with expectations at 0.3%. Remember, CPI is Consumer Price Index. That's month over month. And then the core CPI, which strips out food and energy because those are a little bit more volatile. We can look at crude oil right now and see it's pretty darn volatile. And it came in at 0.3%, expected to be 0.2%. That is a good sign. Remember, we've been wanting to see, or the Fed wants to see inflation. Well, Consumer Price Index is a gauge of inflation. It is when the consumer is being passed on that the inflationary increases that the business is feeling. I don't think I really said that very good. When the business has to pay more for its goods and services, that is inflationary. But what's really inflationary is when they are able to pass those higher prices on to the consumer because the economy will allow it. That's what we're looking for in those numbers. To me, those numbers aren't really saying anything. There's no real inflation. There's no deflation. There's no slowing down the economy with the National Federation of Independent Businesses. They're still very confident. So those are all good things. They would start to see the weakness heading into a recession. Now, we're talking about an inverted yield curve. If you're watching TV at all, they're all talking about how the Fed fund futures are just slightly lower than where the 10-year the yield on the Fed funds, the yield on the Fed funds is just slightly below the yield on the 10-year, and that's for your interest rate, right? So if the 10-year goes below the 30-day Fed fund, that is an inverted yield curve, which is a signal of recession. Now, we are just teenies away from that happening. With the bonds actually coming back off today, it's probably a little bit less likely, but we were looking at all of that this morning, and those would be signals for a recession. I think it's really more of a push to try and get the Fed to continue lowering interest rates to meet what globally is going on with their economy slowing down. I don't think that we should determine our Fed policy based on what's necessarily going on there. If we really started seeing some weakness here, that would be a different story. But we're not really seeing that weakness come out. One thing we got going on today was Trump tweeted out that he may hold off on some of the tariffs heading into the Christmas season or the holiday season because he does not want to see that lack of buying demand happening. They want to see lower prices for that. All right, so let's get on with the overall charts. Hard word to come up with. Up $2.40 on the day. Something to note, man. I thought that this line in the sand was going to be a little bit more of a resistance on the way up. But as you can see here, we didn't really see any resistance whatsoever. It just kind of blew right through that this morning. Right here, we've got this little line in the sand that we've seen act as support several times before, and along these lines acted as resistance right there, and maybe even we could say right there and there. But today, coming through, there was no sign of resistance whatsoever. It went through, it cut through it like a hot knife through butter. Now, the next line to look for is that $58, $59 a barrel area. I think that we're going to see a little bit more of a slowing towards that. I don't think we're really seeing the demand for oil and things of that nature. We will be getting a crude oil inventory number tomorrow, so that will really be the determining factor there as to how the supplies are and how the demand is coming through for crude oil. Now, gold coming off quite a bit earlier today. It really slammed down, tested that 9-day moving average. Remember, if we get below that 9-day moving average, the simple moving average here, this is the 9-day simple moving average, all right? So that line right there came down and touched it. We get below that much, it is going to be short-term bearish. Staying above it is bullish. So we'll be keeping an eye on that as well. Came down, kissed that, but bounced up and away. So we're starting to see some weakness up in these 1,500 levels for gold futures. GLD blasted off this morning as well. It might be coming off as we're seeing the equities start to push higher, right? Because, you know, although gold is an inflationary factor, it is a flight to safety for currencies and things of that nature. But when people start to see the equities blasting off, that's when they pull their money out of gold and put it to work in the equities. So we could be seeing a lot of that happening right now, especially at these highs we're seeing in gold. That's, you know, this kind of parabolic move, people are dying to cover it, especially, you know, shorter term traders. All right, bonds coming off a little bit after getting a bit of a tweezer top here at the top of this move. You can see we got a bit of a tweezer top going on there. Came up very close to that high. It just came up a tick shy of it. You know, we didn't get that 164 handle. I think people were like getting a little bit ahead of themselves there, really. And then we start seeing that yield curve inversion happening, possibly, or at least very on the precipice of that happening. Now we're starting to see it come off a little bit. I think people realized we were getting a little ahead of ourselves. VIX getting slammed today after yesterday's big move. Slammed back down because as soon as the market opened, we started seeing some bullish move to the upside. Something about yesterday's big sell-off, you know, a lot of people were talking about how it was doom and gloom and everything else. All we did in all these markets is come right back down to where we've been talking about in these commentaries is the point of control. That's going to be where we get our markets to want to come down and settle in and around that area. So although we did come out of that, you know, 2,600 handle, and a lot of people were clamoring about that. You know, we broke 2,600, that psychological level. Oh my God, what are we going to do now that we're below that? Well, it doesn't matter because, like I said, we were lined up with the point of control. So it was really a product of the market coming back to value rather than to really signal that we were going to free fall there. Again, you can see with the NASDAQ yesterday, sell-off, massive sell-off, everybody clamoring about it, but right back to the point of control. Today, boom, tariffs lifted, we rally up and test the 78 Fibonacci here. 78 Fibonacci, which lines up with 77.65, really. Peeled through that, but that is going to be a line in the sand. Remember, it is going to act as support and resistance, but during the day session, when we peel through that, it's not over until it's over. We can slowly sell off and kind of peel back below that resistance area. You know, I've talked about how I think that we're going to be staying between the 78 extension and the 38 extension, kind of, actually, sorry, the 50 extension here, and kind of bounce back and forth in here for at least, you know, this week is what I was expecting, kind of settle down there, get some good economic data. But this tweet about holding off the tariffs is definitely going to supersede that kind of market action, and that's what we're seeing across the board with the equities moving higher here. You can see the E-mini S&Ps actually looking to test that 3,000 mark again. We are pushing up against resistance here with the Fibonacci. It lines up with value area high. Anytime we get to those value area highs, we're going to start seeing some slowing of the momentum. We are very close to the point of control here, though, and that could kind of skew a little bit of that as we are really trying to work ourselves through this inventory here. All right, E-mini S&Ps overnight, you can see pretty flat. One might be able to say that they were a little bit short, but as soon as we came into the day, people were looking at that tweet about holding off the tariffs, and you saw the market just rip your face off rally is what it was, is what we used to call it on the floor, because you were sitting there doing this the whole time if you were short. So a rip your face off rally happening today, definitely across the board. Whether or not that continues, another tweet tomorrow could really put this into a tailspin. All right, well, with that being said, let's go on to the trades that I've done for today. And as you can see here, I have FedEx up. Now, the reason why I was looking at FedEx, because this 150 area has acted as a major support. It lines up with the value area low as well. We do have the point of control down there where a lot of time and volume's been spent, so it doesn't mean that it can't really overextend to the downside there. But I'm feeling like this is an area where people are finding value, right? This is where the point of control is. This is where the most time and volume has been spent. This is where the most transactions have had. That's why I think the market is coming in and buying at these levels, and it's going to act as support. So if I'm starting to be bullish in this or think that there's going to be a lot of buying pressure as soon as we approach near 150, I was able to set up a strategy that worked for that very well. And I went into FedEx, FDX, and did the September, and I sold the 145 puts in there for $1, I think it was 84. So sold the 154 puts. Puts me down below this area where I think there's going to be a lot of support. I get an extra nice big kicker of $1.40. High implied volatility. We're seeing volatility come out across the board with the VIX coming off. That should take some volatility out of FedEx. So as a matter of fact, when I set up this trade, I wasn't noticing that there was a earnings trade in there. I was just flipping through. So I'm going to have a very short leash on this. I'm not going to ride this trade out very long. I don't know how I missed that earnings trade. It didn't show up on my watch list as if it was going to have earnings, as we can see right there. It doesn't show me that there's an earnings trade in there. So I made that mistake of not double checking that well enough. So my fault. I wouldn't take this trade if I were you. I would expect volatility to start expanding during that time and not really be able to get volatility to come out, especially with it being that close to an earnings. So something to be said with that. If I can maybe even make a profit on this to cover my commissions, I might be covering that trade today. So sorry about that. We all kind of have a tendency to make a mistake. I got a little bit antsy on trying to add some bullish and premium selling strategies, seeing this volatility really kind of get sucked out of this market. I tried to jump on a couple of trades. This one I'm not going to stick with. So anyway, that's what I've got going on today. I've got myself into a conundrum, and I'm going to have to work myself out of it. So it reminds me of things that would happen on the floor where if you didn't have something on and you weren't involved in the market, somebody would just jam you with something just to get you involved. And that's kind of what I was trying to do to myself here, get involved, get participation in this, but that is not following my rules, and I don't like that trade now all of a sudden. So glad we talked through that. So good to have a mistake, I guess, on one of these things. All right, well, anyway, we are going to talk about how we set up rules like this so we can avoid these types of pitfalls. This is a pitfall that a lot of people might be getting involved in, right? Where, hey, we got high implied volatility. We expect that volatility to come out rather quickly. Let's try and sell some premium strategies. Well, this is not in line with my rules because there is a earnings event, a binary event, which is another thing that we want to avoid. Any binary event that is going to land in and around our premium selling strategy. So great example of what not to do here for all of those reasons. All right, so we'll try and find out. I'll let you guys know what this trade ends up doing tomorrow, because I might very well be out of it by the end of the day. All right, so other than, if you can't take that, take it easy.